the main driver, which we've got to try and focus on, is still, I think, US recovery. And obviously what's happening with Gaddafi. I feel with the US recovery, we've got the stimulus packages starting to roll off, and I think people are quite apprehensive as to what will actually occur. Remember, at the end of the week, we've got leading indicators out of the States and also capacity utilisation in way of economic numbers. So it's going to be quite important, I think, for us to try and work out how the market's going to react when the stimulus packages all of a sudden dry up, and whether or not the economy can stand of its own 2 feet. With Gaddafi, let's see. I think the West really want him out, and I think there will be a sigh of relief, I think, once that concern is taken out. And then I think crude prices should all start to head a little bit lower.
And yet one of the things that seems to be driving the currency markets, and then, of course, alongside that commodities, is this EU sovereign debt crisis. You don't think that it's as important as a driver this week?
No, I don't think it is. Not for the commodity markets. I think generally people feel that whether they do or whether they don't sort of offer more of a package, a rescue package, I think it's pretty much isolated to the one area. And I think when you look at demand supply for that area, it shouldn't really mean too much. If anything, I think that they will come together with some form of package. It'll only be encouraging, but I think overall, when you look at Europe, they're pretty constant in terms of their supply demand. So it's a thing to focus on, but I don't think it's going to have too much relevance reading into the commodity markets.
So in terms of currencies then, you think the Gaddafi or maybe the US recovery situation, is that what you think actually drives the US dollar this week? Because, you know, we were just chatting with John Noonan about euro moves specifically based on some of the reports coming out about these EU IMF meetings.
I think the currencies in itself will look, if the US dollar starts to firm, then that's going to affect the commodity markets. But I get a sense that the market's certainly reading in that that we're going to have negative aspects in terms of what the EU actually come out, and that'll support the US dollar. I get a sense of a feeling that there's got to be some plan in place, because they don't want to see them get out of the EU. They actually want to keep the EU as one. So whatever happens, I think it'll be obviously a lot of to-in and throw-in, but I think it'll be a positive outcome. It should strengthen the US dollar in my mind, and that'll provide some relief for us from the high commodity prices. But as I mentioned, I don't think it's that strong at the moment.
Are you expecting any more changes to margin requirements on any commodities? Because that has been really, I guess, one of the sources of the extreme volatility anyway of the last 2 weeks.
Yeah, we just had a notice that came through, particularly just over the weekend, that a lot of the initial margins are back across the board and actually moving a little bit higher. So when you come in this morning, you're going to have a look and you think you're going to have to pay a little bit extra. I think that's a theme. I think the initial margins will have an initial concern when they put them up, but overall I think it'll discourage that investor or that speculator into the market. And I think at the end of the day that's a good thing, because then we won't get such large volatility that we have seen. You've just got that specky element out of the market.
Yeah, which suggests quite a change, I guess, well, at the very least sentiment, but in terms of the positioning of this market then.
Yeah. Oh, it does. It does. I remember the LME actually did it a long time ago, where they pushed the initial margins up to somewhere 15 to 20%. Now that design, they got all the speculative guys out, and the industry was in. And at the end of the day, that really did test the integrity of the market, but they came out shining. So it could be a similar move that we're seeing, just to get the mums and dads out of these markets because they don't know how to trade it.
So in terms of longer term then, if you're still focusing on the US recovery and the rolling off of stimulus, obviously a big part of that is QE2 and coming to an end in June. But do you see actually signals that then, is this all a signal that the market's worried about life after QE2?
Yeah, I think it is, because all of a sudden you're taking a lot of liquidity out of the market. The numbers haven't been all that positive for us. I'm sure we're getting a manufacturing-led, but when you look at the jobs data is still pretty high. I will be interested to see how leading indicators, and remember also we've got CPI picking up as well. So, you know, in my mind it is a worry that the market's certainly going to focus on, because you don't want to slow down, you don't want an economy that slows down while inflation's picking up. Very hard to manage.